Good morning. If you're new here, make sure you subscribe. You know, my magnificent monsters of the markets, grab your caffeine choice. I got the Ultra Gold this morning, and the market is screaming two completely different and opposite things at us. If you're confused about the price action, well, good. I mean, it means you're actually paying attention to all the chaos out here. We have officially trapped a hammer candle yesterday and a tombstone candle. I mean, doesn't get any better than that. Super bullish and super bearish, and boom, we're caught right in the middle. Market having a full blown identity crisis lately, and of course, everybody's like, "Oh, it's all because of Trump, right?" War is over, maybe, possibly, maybe not. Um, so, how do we figure it out? Why does it matter? Well, whipsaw. That's the kind of action we've got right now. If you don't know what you're looking at, that's the the Wall Street term for the price action that we've had lately. Whipsaw. It's where you think we're gonna rip down, and then next thing you know, we're ripping back higher, and it's kind of sucking everybody in on both sides. That's the market loves to do this. How does it screw the most number of people at the same time? Sucks everybody in. Now, the S&P just flashed a signal that has predicted every single bear market for the last 50 years. But at the exact same time, buyers jumped in the pool to defend the most important support level in the entire market. And all thanks to, I guess, a single headline or a single post on social media. And if you get this wrong, you're either going to ride the elevator down into the basement or possibly get left behind on the tarmac while the rocket ship blasts off to eternity. But don't worry, I'll give you some exact moves out of my playbook to survive the schizophrenia that we've got lately, including a potential defensive way to play that pays you to wait and, a volatility trade that might double your money. We'll see. We'll talk about it all. We'll see what we got cooking here. So, the bad news. The tombstone. See, last Friday, the S&P closed below its 21-week exponential moving average. Now, all right, take it easy here. Jeffrey, you're throwing moving averages around before I even got my monster choked down. Bear with me, everybody. Bear with me. This isn't just some sort of random squiggly line on a chart. Now, the 21 EMA is a structural trend line of a bull market. Funny enough, it's also a Fibonacci-based number, It's kind of a line in the sand. Now, historically, when the market has made this signal, 21 week, it's a Grim Reaper. It broke back in August 1987, right before Black Monday. It broke March 2000, right before the dot-com crash. It broke October 2007, right before the Great Financial Crisis. And it broke January 2022, right before the last grind lower in a bear market. Every major crash, every major, suck down in the last 50 years has started with this exact same signal. And it just showed up last Friday. Now, we have overhead, we've got resistance, we've got support, we've got the tombstone has been planted. The bears are, sizing up the coffin for the markets, and everything's glorious to the downside, right? But wait. The hammer candle that showed up Monday morning. The market opened lower, looked at the tombstone, panicked. Oil spiked to 120 in the wee hours of the morning. A barrel of oil was skyrocketing. on all this Iran junk, the fears, you know, and the S&P plunged 2% intraday, hitting that 200-day moving average right around, was it 5,700-ish? So this is kind of a tactical line of support. This is where the algos and the institutions live. And then what happened? Buyers stepped in. We kind of bounced right off of the daily roadmap line. It was kind of like Black Friday at Best Buy with super cheap deals on TVs and consoles and you name it. They had a little help from the commander-in-chief, of course, around 3:30. A CBS interview leaked where President Trump says, the war in Iran could be over sooner than people think. He said, we're very, very far ahead of our schedule. And boom, boom. The Trump put is back, baby. Oil collapsed from sky-high prices down to basically filling the gap in the 90s. 35 minutes, the S&P ripped from in the red to nice green close. Tech stocks, which were getting just punched in the face, slaughtered, taken out behind the woodshed, suddenly remembered. Got Superman capes, broke them back out. The NASDAQ led the charge. The S&P printed a massive, beautiful hammer candle right on the 200-day moving average. Buyers essentially told the sellers, not today. Not today. It's not what we're doing. So, what's it going to be? 21 EMA saying that the bull market is done. The 200-day MA saying, oh, wait a minute. Hold my beer. Both could be true. You can win a battle and still lose the long-term war. Right now, we're trapped in a 250-point box on the S&P. Support down around 57. Resistance up there close to 6,000. The market, it's probably going to pick a direction. But this chop may not be done yet. As I mentioned yesterday, we might see volatility. Now, volatility doesn't mean drop. Volatility means volatility. Volatility means big moves. And I expected chaos in the market at least through next Tuesday when the VIX OPEX happens. So when the market does finally pick a direction, it's probably going to be violent because we've just coiled the spring up, especially on big tech, NASDAQ. We've coiled the spring up since October. I try to predict. I try to prepare. I make my speculations. But really, I just wait for price to tell me what we're going to do, and then I take my actions. I prepare accordingly. I'm not really planning for a big giant crash just yet. So how do we play this out? Well, I got a few setups for you, depending on how well you want to sleep at night. First off, if you think we're going to stay stuck in this box in this range, you can play the range. You can iron condor it up, or sell some puts below support, sell some calls above the resistance. Let theta decay do its magic for you. And when S&P figures out what it's going to be when it grows up, bull market or bear market, you can have some profits. Now, if you believe the tombstone is the thing to watch out for, it's the omen in the market. If you think the bear market's here, baby, well, probably should buy. Maybe you should pick up some insurance. Buy some SPY puts, buy some SPX puts. Go down. Maybe some long VIX calls. Probably out to April or May. But don't be betting the farm here. I mean, this can rip the other way quickly. We're talking like 2% of your portfolio or less to hedge any long positions, maybe. And if the S&P closes back above that 5950, maybe 6,000, we'll look at the actual charts here in a minute. The bear market signal is kind of invalidated. You could cut that hedge free. Third, if you believe the hammer, you believe in Trump's hammer of justice and the war is just about done. I mean, you could thank Kramer for saying that this was likely to go on forever. I mean, he basically came out and said that yesterday, and then guess what? Trump tweets, "Hey, I think we're about done." I mean, Kramer's a genius, right? If you go long QQQ calls, or TQQQ anyway, you short energy. I mean, that move up was overdone on oil. The thesis could be simple. Tech benefits from the risk-on environment. Energy fades as oil drops back down to earth. Maybe uranium starts ripping again as we focus back on AI data centers. But maybe one of my favorite plays right now for uncertainty, for a defensive income generating play, possibly take a look at XLU, utility sector spider. Why? Because utilities kind of works in both scenarios. If the tombstone wins, utilities are a safe haven. If the hammer wins, you still get solid dividends and low volatility, and XLU is still going to keep growing as demand for electricity keeps climbing higher. I mean, it's consolidating right near the highs at 73. You could look at selling maybe 70 puts about 2 or 3 weeks out. Maybe you collect some premium and end up owning the shares. Then you have a defensive asset at a discount. Beautiful, boring, safe, might be a way to play. And then you have a pure volatility play that you could do. Tomorrow morning, we're going to get CPI. We have conflicting technical signals. For those of you looking at the oil price and going, man, that's the biggest component of inflation. Remember, the CPI print is for February, not for March. It's a massive binary event, right? It's a recipe for volatility explosion or expansion or maybe collapse. I don't know. Maybe long VIX calls. I mean, maybe you could go with the ones expiring next week if you want to be super aggressive about it and just play the event tomorrow. The VIX is sitting right around that 18 to 20 area. I haven't looked at it at the moment, but, could be relatively cheap to a potential spike if we get another knee-jerk reaction tomorrow. And if CPI surprises either direction, the VIX could rip 25, 30, maybe higher. You could double your money if you're at like 22. But remember, this is a high-stakes game here. High-stakes ping-pong and ding-dang. If your CPI comes in flat, volatility is getting crushed, and you're going to lose money faster than betting at the blackjack table. I mean, make sure and size this one appropriately. In a world of chaos, the only thing that you can count on is relentless, beautiful, terrifying logic of the market, completely irrational. And right now, the market's saying one thing, or maybe it's saying two things. I mean, it's saying, look at the hammer, look at the tombstone. I mean, they both can't be right in the end. So pick a side, but no, you might be wrong. Because the market, we're going to find out who wins. The market's going to tell us. It's just a matter of time. And your job is just to listen and pay attention. I'm Jeffrey. In case you're new here, welcome to the show. Let's look at some charts. Let's talk about how we might make some informed decisions today. So jumping over here. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation here is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. Anything I talk about might lose your money. Let's face it, 90% of traders, I say traders, 90% of traders, this is kind of a common statistic. If you naively trade, you lose money. I mean, it's just kind of the way it is. So be careful out there. You want somebody to tell you what to do. You can hire somebody for that. That's not what I do. I'm just a dude on YouTube. I got a bag of unicorn dust and I sprinkle it on the market and try to get lucky, but sometimes I get lucky. Sometimes I get lucky. Look at that CPI. Now, this is forexfactor.com right here. You click on the calendar button, big green dude up here, and here we are on the 10th. Pretty benign day. Tomorrow we got that CPI coming in, and we're expecting the numbers to change a little bit, maybe, possibly, maybe. 2% inflation is not everything's back under control. 2.4%. And if we get any kind of spike in here, might be a little crazy. Now, prices coming back down would be negative inflation or disinflation or de-inflation or deflation. I don't know. There's like debate in economic circles about what the correct term is, whether it's disinflation or deflation, or I don't know. Apparently deflation means something different than disinflation. Who cares, right? Prices are going higher. Prices still going higher, even at these kind of rates. We'd have to be down here flat for prices to not go higher. 2% inflation is actually a core thesis to keeping the whole U.S. economy going, because people feel like they're making more money. It's like a psychological thing. Even though the prices of everything goes up, we feel like we're making more money. And cheery, happy people, right? I don't know. I think no inflation would be better, but what do I know? Nobody asked me. Now, remember, economics and the stock market are two totally different mechanisms here. Think about it. High prices in the economy destroys demand. Low prices brings demand. I mean, it's just supply and demand, right? Supply stays constant. Demand rockets up. Prices go up. Demand drops out. Prices go down. That's completely opposite in the stock market. Prices go up in the stock market. It's like a moth to the flames, baby. Oil went up. People were buying it like crazy, even right into the top. Prices go down. It's like cockroaches. Everybody's scattering. That's opposite the economy. So using economic indicators to try to predict the stock market is like basically a fool's errand. You've never thought of it like that. Now we do on Friday get core PCE. That's Powell's favorite inflation measure. So we got a double whammy on inflation this week. Got core durable goods, preliminary GDP, Joel's jobs. I mean, we got lots of good stuff coming out on Friday. So the fun may not be over tomorrow with CPI. Just keep it in mind out there. We got some more stuff coming up. I find it very interesting. They've completely decoupled. Like CPI and PPI used to come out back to back with retail sales. That is not the way this is happening. And I don't even know anymore. They've, that last government, I guess, 2 government shutdowns back when we stayed down for a month and a half, longest one ever. They've mucked up on the numbers, and now it just keeps on mucking up. I don't know. Just keep messing with them. Now there's PPI coming out next week, along with our favorite event of the month. So look at this coming out the day after. This ought to be interesting. So this FOMC meeting happens the day after March OPEX, or the last day to trade options for VIX. If you didn't know, like if you're trading VIX, Tuesdays are the last day you could trade right here. Whoop, last day to trade VIX. And then we get that FOMC meeting. Well, that sounds fun. And then we have regular options expiration. So next week, probably some chaos in the market, if there's going to be chaos. So right now, prices of energy, specifically oil, higher. I'm not sure they can cut any rates at all. Hey, thanks for becoming a channel supporter. Gabe Zump. And remember, 5 p.m. today, 30 minutes of awesome. I do a request show. And after that, we do, for channel members, like Gabe just became, we do an Ask Me Anything and hang out until basically the questions are done. So that's right on the back of the third. I mean, it just one right into the other. And so make sure if you want me to review your chart, your ticker, whatever, come hang out. 5 p.m. Eastern. Yeah, we'll probably be going at least an hour or a little longer, probably, since we go into the Ask Me Anything at 6. And yeah, so come hang out. Moving on. XLE, XLU. So there's opportunity on XLU. I guess my number's a little bit wrong due to the split. Dun, dun, dun. Got that high. We got this low. We're consolidating right here around 46. And while it could come back to the roadmap line, anything in here could be an opportunity. I mean, this thing's going up and to the right. Up and to the right. And we did have a bit of a pullback back in 23, I guess 22, 23. Swift pullback in COVID times, but up and to the right. So this is a kind of a long-term stalwart, utility is stable. Pays a healthy dividend. Never checked it out. 2.4. I mean, it's not like the most banging stuff. I mean, you could always go over to JEPQ. This has been beat down a little bit with the recent pullback, but I've got a 61 target up here. Yeah, I've got 2 shares, it says, at Weeble. Now, this one, almost 11% dividend. And if you adjust for the dividend, tends to do that same up and to the right. Even with pullbacks, if you can maintain your position, you don't have to sell today. 11% is pretty juicy. Pretty darn juicy. Now the downside here, probably not paying much on options. If you're trying to cash flow it. Take the adjustment back off. Next up, let's go back to just what we normally do. S&P, baby. Look at that beautiful roadmap hit. As briefed, we're probably going to hit it. Now, the contrasting crux of the matter. NASDAQ still needs a lower low. And this correction, A, B, C, maybe. Absolutely beautiful correction. We're sitting here on this support. We keep grinding it. Grinding it. But it's going to look best with one more dip below this low. It kind of clears the slate so we can go higher. Or it sets the stage for bigger downside. I don't know which one right now. Either way you look at it, this is kind of incomplete at this point. Now maybe, possibly, that was all the correction, and this is just some sucky price action we've just happened to come into here. I mean, we've been holding the support zone, this blue zone here. The reason it's blue, pullbacks tend to stay in there. The pink is the ideal spot to hold, but I've been holding the blue. So if we get a daily close below the roadmap line, should be on for a deeper retrace, should be on for getting a lower low, should be on to maybe dipping on out to 23,000 on the Qs, or the NASDAQ, which is the Qs. So that's something to watch. But the S&P is telling us a different story, because this high back here, we didn't maintain a lower high like we did on NASDAQ. We made a higher high. And this pullback, hitting the roadmap line right here, could be complete. Check plus, A plus. Could be donezo. So we got mixed signals in the market. Now, the main driver of the market for the last, I don't know, 5 years at least, 10 years, maybe longer, has been those big tech stocks, right? We've been calling them the Mag 7s. They've been the big drivers. And we're talking about Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Those have been the big drivers of even the S&P. And so far this year, they've pretty much been sucking it up. I mean, they've been sucking it up since October, pretty much. Haven't really seen anything out of this. And you could even go back further. I mean, we've been stuck in this range maybe even since September. You could say we've been messing with this range since August, really. You consider that dip right there. And we may need one more dip down into this summer price action here. Clean this up. So if you've been frustrated, not able to make headway, it's because the market's been frustrating everybody for months. It's not really directional at all. And I don't tend to trade very directional when the market's not directional. So looking at ES, boy, that got darn close to. I drew this in here. Bounced a little higher. Got up above that key level, though. See, I wanted to stay below that for clarity on the downside. Talked about this yesterday, but we reversed it, and now we're back up here. This creates a question. Like, we're still in a downtrend of highs on, this is the S&P 500 futures. There's more candles, more data here, because this trades 23 hours a day, 6 days a week. Whereas S&P trades like, this cash index trades like 6.5 hours a day. It leaves a lot to be desired as far as what happened overnight. S&P 500 futures, they fill that in. And this is how like the newscasters are like, oh, we expect the market to open higher today. It's because of the futures. So looking at this, we've provided a bunch of uncertainty here. Got the downtrend. We didn't get the continuation. It's a heck of a weird. And we had that gap down, filled it back up. Uncertainty. So look at the 15 minutes. So far we're above it. 30 minutes. So far we're above it. And the 1 hour is the one providing, look, it's been resistance, still resistance. So operative chart to watch right now, the 1 hour, and then the 4 hour above that. We rejected right over here pretty hard. We could come up and reject again pretty hard. Something to watch. NASDAQ, same kind of story. 4 hours seems to be the control. NASDAQ futures, NQ, if you've never seen that before. RTY, a little different path here. We dipped on out to that daily roadmap line. This is game on right here. That was a bullish back test of the breakout. Tested the roadmap line, tested this breakout from the highs back here. Boom shakalaka. Set to go higher. Now, if we break down here, that's probably all she wrote. That's probably it for this move higher. 27.37 is probably going to stand where we hit up here. If we can get the mustard strong enough to go higher, bring in enough people, we're going to make the next leg higher. 3,100 is the target up here. How would you trade that? You're like, RTY, that's futures. How the devil you trade something like that? IWM is the ticker you could trade here. And go higher from here. It'd be roughly 20% upside. You could jump on something like this. Did pull back a little bit, but 20% upside on item gets us a 40% upside here. So looking at going from 50 to like 68-ish. 48 to 68. So plan accordingly, be careful. Oil back down in the 80s. Not to my surprise. Probably coming back down. Went too far too fast. Flew too close to the sun. Bounced off of that 618. Probably coming back down to supports. Now a 618 retrace from the low to the high. We'd be sitting right here at 73.60 area. So we'll see what happens. We blasted right through that prior high. All those highs. Look at that. We gained a little momentum and went ripping through. Beautiful. So now we've hit that 101.50 resistance. We're coming back down violently. Watch for holding. So this will be the tell. If we hold here, this could push us on higher. If we break through that level, we've got the blue right below there, down at 65. There's 80, so that big blue zone right there. Potential supports. We get below that 65, probably coming down in the 40 to 50 area for the next support. Fairly simple. We can kind of clean it up just a little bit. I've been looking for that dip on down there for quite a while. And moving the wrong fib line. Here's the high. Here's the lowest low. There's the highest high. But look at this. It it still corresponds right there. So if this A, B, C turns out to be the bigger A wave, bigger B wave, and the bigger C wave, all kind of corresponds right down in there. And then that could be the bottom for a while, and we go higher again. The gold oil ratio, the gold oil ratio is just all skewed up right now. If you look at how many barrels of oil it takes to buy an ounce of gold, this is all just goofed up. Like we're way off the historical 20 barrels of oil for an ounce of gold. We're up here at like 60 right now. This probably coming back to this historical average at some point. You'd be like, what does that do for the prices? Well, see, here's the thing. We price gold in dollars and we price oil in dollars. And when we divide gold by oil, we completely cancel out dollars. So it's priced in barrels of oil. It's ounces. How many barrels of oil does it take for an ounce of gold? Historical is 20. So these things have a large divergence between them. What does that mean? It means the trade for this coming back together is short gold, long oil. That's how you would trade it. But that seems like a nutty trade right now. So it may not be for you. Eventually, though, this is probably going to come back down. Probably going to bring it down. Every time we get some crazy spike, we bring it right back down. It's this is definitely an extreme move. So watch out. Watch out. There's still got more chaos set up in the commodities market. It might even make a new high before we push it back down. Gold is looking like the first bit is setting up in here. Be very careful here. This can quickly develop into another swift drop, whether you want to believe it or not. I'm not saying we can't go higher. Certainly can. But this is the setup for a swift drop cooking right out of here. This 52.60 level. That's a measured bounce. 1, 2, 3 can bring us way down in here really quickly. Really quickly. Just be careful. 46 might be the next place. If we take a swift dive, you can see this down to 46. Chop in here a little bit, and then take our fifth wave down, and that could be the end of the correction. Once we make that low lower than the initial drop over here a couple weeks back. Just price action. And looking like we might cruise on up. Oh, so this looks like 1, 2, 3, retrace to a 618, possibly get that little move up A, then chop it back down for the B, and then cruise on up to the C wave in May to June, and then crush this on down. If you've not seen this, this is kind of my path that I expect for Bitcoin for the next few months. So far, chugging right on schedule here. Probably get a move back down, probably get that move up here, and dip on down to the 30 to 50K zone by October. Bummer, but that's what I expect to happen. ETH, stick out my guns on that one. And not breaking out, not breaking down. Just sideways, choppy crap. Slight up bias, but not very good. I'd be careful on that one. Dollar. Well. This might tell the story. If the dollar takes a big swift dip here, we may see gold actually pop a little bit. Red dollar index tends to be a green day for gold. Now, if we go ahead and pop here, if we hold the roadmap line, which so far we are, and we break out higher, cruise on up, 105, 100.5 resistance. But if we break through 102, the big short trade of last year, the short dollar trade, going to start getting stopped out. And that could swiftly lead to prices up here, 120, 130, 140 for the dollar index. Just something to keep an eye on. Messes with all the currency rates. NKD came down close. That would make a good first move down retrace. So watch for this to get up here as drawn yesterday. And if we do that, bounce off of the zone. Of course, the blue zone is the entire zone, but the pink is the ideal 618. We could end up right down here at 44. That's going to create a big suck down, more than likely, in the S&P, NASDAQ, and other risk on assets, Bitcoin, NKD, global liquidity indicator. People borrow money in yen, then take that money, leverage it, and put it into risk on assets, make some money there, come back, use that as collateral to buy more yen, and it's a vicious cycle. When that trade has a hiccup, we get these big pullbacks like we had right here, and we had right here. You can say this was Liberation Day, but what was this one? This one was just the yen trade blowing up. Arguably, this was too, just compounded on Liberation Day fears. That was the second leg of the yen trade blowing up. made a lower low. A, B, C. I knew it was coming. I knew there was another leg to it. And that one showed up in the S&P. Right there. Big fat pullback. And that, everybody, even though nobody talks about that being a market crash, that right there was bigger than COVID. That drop from here to down here was greater than the COVID drop. And it only lasted 10 days longer. So essentially just as fast and just as big. But nobody talks about this being a giant market crash. Everybody talks about the COVID crash, but nobody talks about that as being anything but Liberation Day. It started. The whole thing started up here, but there was no reason. It's because there's no real reasons in the market for flush outs other than a little too lofty. Moving on down the pipe. Apple. What's up, Apple Dumpling? Finding support at the roadmap line. If indeed you do, we can break through the downtrend. We poke through the uptrend of lows. So this is a cautionary point. If we don't hold here, this can get a bigger flush out. But there's the resistance. Resistance. If we're going to pop back up, we got to get through that to go on up to the 295. Right now, we're in a warning zone. If the flush out continues, we could see this push on down in the low 200s here. Amazon still holding. Still holding up trend. Got to break through the roadmap line and these gap downs here. Get through that stuff, through that 618. Game on for the prior high. Maybe an extension. Possibly even a bigger upside move. 300 maybe. I like it. Google. Still in this consolidation here. Still looks like we're hunting that zone right there. Still in a pretty good pullback. Nothing changed here. I'm thinking we're going down before we go higher. But if we find support right here, we're kind of in the same zone where we found support before. That's it. Next upside, right around 370, 385. 375, 385. That's that next upside move. Right there. And we've got some confluence there right now. Couple different fibs, couple different ways. Meta, holding on to the lows, uptrend of lows. We can break out above here, 1100 to 1300. Doesn't matter how much you hate Meta. Probably going higher. Microsoft still hasn't proved we're done correcting yet. Still hasn't made a higher high. Still can dip on off. Still can make a lower low than we made back here on Liberation Day lows. Looking a little soft on Microsoft. Microsoft might be Macrosoft. Tesla, what a reversal yesterday. I liked it. I liked it. We dipped all the way down into 380. I wanted to see 370. Still possible as long as we're under the roadmap line, but I really liked that reversal yesterday. That was really nice. But we're not making higher highs yet. Circling back to NVIDIA. This is probably still set up for a visit down around 150. Now, doesn't, there's no story and logic here except that this was resistance back in December 24, coming into January 25. Off the Liberation Day recovery, we blew through that zone with barely a pause. Ran out of steam up here into October. And we haven't really retested to make to reaffirm that that's support, to reaffirm that's a solid level. Consolidating in here, we've got a swift first move down A, a choppy recovery B to that high just after right around earnings there. Now we're back down in the sauce here. One more dip. Lower low than that is the minimum we need. And retesting this area right here around 150 just makes sense. Now, how long could it take to do that? Well, we've already been chopping here for August, September, October, November, December, January, February, March, 8 months. Just been grinding sideways right here for 8 months. What stops it from doing another 8 months before we dip on down? Nothing. So be careful here. Thinking just keep stock at rest tends to stay at rest. And this one, biggest company in the world, biggest company in the land. It's hard. Everybody's coming for the king, and it's hard for the king to double or triple in price because just to double the share price, we need $4.4 trillion. Where does $4.4 trillion come from? Not many places. So that's the problem being the biggest company in the land is there's not much room to go higher. Law of big numbers. Apple and Microsoft fought that for a long time, and they still fight it to this day because when you're in a 3-4 trillion, even when you're in a 2 to 3 to 4 trillion dollar valuation, it takes 2, 3, 4 trillion dollars to double again. Kind of puts a limit on how much you can grow on your share price. Netflix. Wow. What a beautiful. I mean, I talked about this going to pop up to the roadmap line for a long time, and we popped up there and stopped cold. What's next? Probably a retrace, and then we can attempt to go higher again. All right. I go pull gainers. I go pull decliners. There's not many on the list today. And usually look for some opportunities. Light still needs a bigger retrace. ASML still, I mean, this charts like this cause me concern here because I know that needs another pullback. I know that needs a little bit more pullback. I know that needs pullback. I know that one needs pullback. So we still haven't flushed out the market sufficiently yet. Coinbase coming back up to the roadmap line. Gold miners trying to find a little support, but they need to go visit the roadmap line. MSTR has potential to come up to the roadmap line. We did hit a long-term support potential. Back up 200. Makes sense. BABA potentially found that downside. ABC. Beautiful point to bounce from. That may be a big opportunity if you get the cash for it. PPLT. Still didn't hit the roadmap line. My favorite one of the year. I'd really love to see this dip right down here and then turn around. I think this could be the biggest performer right here in the commodity metals space. This has opportunity galore. If we could hold that support, break out higher, go cruising right up here. It's probably one of my favorite charts. Now it can crush all my hopes and dreams and just go diving down, or we could break out above this 200 and go cruising up here. My ideal price action would be to see that dip just a little bit lower, back in that 140 area, another 10, 11 bucks lower, and then go cruising. I mean, we may even get up to 400, possibly even up to ridiculous levels up here, like that 700, 690, 700 area. That'd be ridiculous, but absolutely beautiful. It's potentially there too. Go look at PPLT. Look at that. Same pattern. Same pattern. We shot right up to that 1272. We can take this on up to 400 here. We're retesting the breakout now on PPLT. So I like those. Everybody talks about gold and silver, but I like these better. And it looks nasty. See what some decliners look like. That's not declining much. That's kind of ridiculous. Watch out for the bigger pullback. QRU. Come on to Papa. Looking for this to pull on back. EWY. Looking for this to come back to the roadmap line. Right in here. Just needs it. Like it cruised higher. It hit the 1618. Bounced off of it. Now we could potentially hold support right there. Could hold support right here. Could hold support. That looks best. Retest the breakout. Could take a while though. That's the thing. This correction back down doesn't have to happen fast. You know, this whole rip off this low right here didn't have hardly a pullback at all. So a nice swift pullback would set this up to potentially even go higher. DoorDash potentially bottomed. DPST hit the target. No idea on that one. Like, that's sloppy price action. Looks like it may go lower. First move down, retrace. Went a little high, but this looks like we may take this on down to 39. Regional banks. Be careful on those, I guess. All right, stuff set up for potential entry today. Pull up the statistics. Take a look. Oh, man, 40, but nasty. So 40, statistically significant. 67, below average. 1.7, above average. So even though it doesn't win as much, the winners way exceed the losers. 702 would be the upside here on that one. DYN. I'm sure my searching algorithm found that, and it's almost to the 20 target. I would be looking more like for a close above 19 or 20 to get 27. Doesn't have any statistics. Fly W. Here's the high. Here's the low. Fly wire. 16. These are low price stuff, so be careful. The stop is always $1 below the low. When the low is down around $10, that means we're adding 10% risk to the already from here to the low plus 10% more. That's not the best risk reward. We're down to the low and 960. So right there, your upside, $3. I guess it's kind of balanced actually with where it is right at the moment. Fairly balanced. $3 upside, 350 downside. You take your pick. It doesn't have any statistical significance to the history. So the historical average here, 75% across tens of thousands of trades, and profit factor 1.2. So these don't mean anything because there's not a statistical number of trades. We need greater than 30 over here to glean statistical significance for this trade. So these numbers don't mean anything right here. Fall back on the historical, 75, 1.2. Net. It doesn't mean that a ticker doesn't have a statistical significance. It just means that the numbers don't. Like that particular ticker may or may not trend. So this pattern is a trend pullback continuation pattern. And my little algorithm, searching for it on Discord, using the Python algorithm, picked up this right here for a target at 229, which would be inside the bigger high, low pattern here. So you could go after that, move your stop up, and see if you can get that piece. Not a bad one on Cloudflare. No statistical significance there. RES, RESPECT, RPC. There's the high, there's the low entry. Oh, I can click on things and move it. I don't even mean to without. So that has low price stuff. I'd be careful on that one. Getting close to a statistical population, 82% winners, but the profit factor is negative. That means the losers eat up the winners. I would be careful touching this thing with your money, my money, any money. All right, circling back around. Let's check out SPY. Try to figure out where we might go today. Boy, look at that yesterday. It was good right up to the end, and then boom, right up to the roadmap line. It's funny how more often than not that roadmap line matters more than the gamma levels. Pulling it over to today. So gamma levels, right? It's kind of like reading the tea leaves of the options market. I can't really do this early in the show. A lot of people want me to do it first thing, but option flow doesn't really happen. We call it amateur hour for a reason. It takes like about an hour for a lot of the flow to get going. Now, this right here is pretty devoid. I like to see a solid, what I call a bubble form, where there's a whole bunch of big levels stacked together. This is kind of like a smattering. And the big level, this is a warning. This is warning you. PCE, CPI, PCE may come out negative. The market is warning with this giant level down here at 660. We're up here at 675, 676. So we may hang out between 670 and 679 today. But we've got that giant level down there. Let's go with 680. That's where we got the 100 million level at 680 right now. So roll with that on the top. This might be a consolidation day. Turnaround Tuesday. That was only a 3-wave move up too. So this is a warning. Ideal spot. This price action looks just like an A, B, C. Right into the 15-minute. So we may see an initial move down and a retrace, and then a big extension lower. That giant level sitting down here at 660. All right. Levels for the day. Let's see if, we're not very stacked up here today so far. Today's the 10th. All that crap on the 9th expired off. 10th is pretty devoid of options. And get that big 675. Hold, $10 billion? That must be from yesterday. Yeah. So 675 was a giant put level played yesterday. Kind of skews up all the numbers here today. So I'd be looking to probably hold around 673. Get a little down pressure on it. Put my level there, and this is going to go down at 660 because that's where the big mamma jamma is for the Friday optics. So if we get out of this box, probably coming down here on SPY, that would be, I would expect us to hang out here into the close, at least based on what I'm seeing right now, but this very well could take hold. So there's no all clear, even though Trump's saying war might be over. No all clear on SPY. Save that. Check out QQQ. Look at that. We were hanging right. Look at that. Look how well we hung right on that until boom, shakalaka. I warned about pop. All right. 9:30. So we got Qs have been even less. Like there's been more people playing SPY, less people playing Qs. Let's see what we got cooking. 601 still the big level. You know, here's the thing about the Qs is that most people are playing out for the monthly right now. There's not even like this Friday is not even a big level. Kind of skews up everything a little bit. You know, there was no giant players yesterday. Got a lot of call players today, so we're probably going to rip the calls. Probably going to be a soft day. Check out the heat map. This is a better bubble formed in here. Like, see how these big levels all stacked in here? 609. We're down at 606. That's a lot of call players in there, and we're below it, so that's down pressure. This big level concerns me. Down here at 590. Another big one down here. Another big one down here. 575. So we're stacked on that monthly for the downside. Out the next Friday. Today though, looks like we have up to 616 down to about 602. Got some upward bias on Qs. Back to look at the big levels there. Yeah, if I was gonna just balance it somewhere around 602.50. And that big level 601. Which is right where we'll leave those alone. So it seems we got some down bias, and if we break out like of this, we're kind of at the bottom of the bubble right now. If we push down below the bubble, this bubble will probably shift on down. 609 is kind of the big level right now for today, but that can evaporate pretty quickly. There's nothing holding. There are no levels in here holding for today. So caution. If this thing starts getting away, things are going to get really spicy really quickly. Probably won't do much today since the big show is tomorrow and then Friday. The CPI and the PCE. But then we have FOMC meeting next week on the 18th. And that may be why the Qs are stacked up on the 20th there. Doesn't mean we won't go higher. 609 is also a big level in here. Let's see, put a secondary level right in here. 609 area. So we may come hang out with that since it's the big gamma level. 609, 6 and 610 is kind of building a little bit too. So the levels on the level page look like we're going to go down, but the bubble looks like we're going to come hang out with this price action right in here. I know, maybe just revise this up here. Leave this one down here. See what happens. All right, everybody. I'll be back at 5. We'll take your requests. And I'll be on Market Masters at 11:30. Links in the description. Have a great day. Be careful out there. This is unclear right now. It's kind of like flipping a coin. Volatility is probably going to be the thing. And volatility doesn't just mean this. It means this too. But just that VIX doesn't price in this. It just prices in this. So VIX is kind of broken. It doesn't work for that. Works for this. VIX works for a good drop. Here, ramp it up. But it doesn't work for a big pop. So be careful out there. Be careful out there, everybody. Have a great day. We'll see you again later. Come see me at 5.